Before I buy a stock, I always ask these two questions as a way to test the level of conviction I have in owning the stock. The first thing I ask is if I bought this today, could I lock? What I mean by that is, could I buy it today and lock my phone up for 1 year and not check the price? I'm that confident that I can sit back and let the stock ride. The second question is even more powerful. Could I not only buy it today, could I automate future purchases, buy it every week for 52 weeks, and then check the price of the stock, unlock my phone? So, I mean, you can take it literally, but really it's more a mindset game, an evaluation, how you think of stock. So I have found through the years and 30 something years of investing, where I go right and where I go wrong when it comes down to a level of conviction, it comes down to those two questions: buy and lock is what I call it. Buy it today, lock up my phone for a year, although I don't literally do that. It's more a mindset standpoint. I'm indifferent about the price over a long period of time. So I'm Tom, the investing tiger, and we're going to look at maybe three examples, three stocks, how I'm applying that to where I've used it, don't use it, and maybe about to use it. And I should also back up and say, if you were a short-term trader, probably this doesn't apply to you. But if you find yourself like, hey, I buy a stock, I always seem to get in late, get in early, get chased out of it, this might help you a little bit more. So the first stock that I want to talk about where I applied this to was um, is is Kava. I'll talk about Kava. So non-technical stock, non-high-tech stock, but a big restaurant chain and growing restaurant chain. I had high conviction, bought it post IPO, and I waited to buy it, started buying it in the 20s and the 30s, bought it on the way up. I still hold the stock now. I bought it every week, added to it, had conviction in it. So here we are a couple years later. Um, do I regret not selling in the low hundreds, maybe even mid hundreds, and locking in a profit? Sure. On pullbacks, I have added to it because my conviction still holds. I'm not worried about a 1 or 2 year gain. I'm still thinking 5 years on that stock. So I'm willing to sit with it in the 70s, 90s, it flirts with 100 occasionally, and I'll still buy it on pullbacks. My conviction holds. What I see in Kava, and this is not investing advice, this does fit to me, is when you have a retailer or a restaurant chain that works in 100, 200, 300 geographies in the US, it, it tends to replicate itself pretty well. You think about Chipotle, names like that early on, if you got in, held through it, and didn't get chased out of the stock, you had several thousand% returns. Now, sure, there was that up and down volatility, but it is hard to pick out the entry point. I'll tell you what, let's play a game. Let's take a look at something that's going on right now. This is a stock that's deservedly so got a lot of attention. So let's kind of apply this test. Let's go back in time. What we're looking at now is a chart on Micron. So Micron right now is it's been a great story stock in 2026. It's been one of the darlings. So what we're looking at is a 1 year chart on Micron. And let's apply the buy and lock test before I share the other two stocks that I'm applying this to or haven't applied it to. So here's the 1 year chart on Micron. So let's go back in time. Let's play this game. Let's go back to, we'll pick up in July of 2025. So let's just say in July of 25, you read, hey, DRAM is going to be in high demand. Margins are going to increase. You had high conviction. You saw something, read something, researched something that made you have that conviction. You go ahead and buy it here in the 120s on July 1st. Okay, so let's just move this along. We'll go inch by inch. A week later, hey, you're okay. You're checking you're like me. You're checking the quote every 10 or 20 minutes, looking at the chart, maybe looking at level 2 quotes, seeing if you can get that edge to see if your conviction, your story that you bought it on, the thesis is rewarding you in 1 week's time. So you're feeling pretty good. It's in the 120s. Okay, then we move along. Let's go through the rest of July. Oh, it's going down now. Now you're starting to question yourself. You've got a 113, 114 handle. We'll play this out a little bit more. I'll tell you what, now you're getting to be 10, 15, ooh, 105. You're running close to 15, 20% down. It doesn't feel good, does it? So two things start happening in the back of your mind. You're either going to buy more, you're going to get paralyzed by the price action. It's going to test your conviction. Or you wait it out just a little bit longer. There you go. You got the 120s. You take your ball and go home. Cash out. That's fine. You've made little to nothing on the stock in, what is that, 6 weeks time. So that by checking the quote on that, that's what you experience for the first 6 weeks of ownership. So you can see to the right, the chart goes up and to the right. But there's a lot of activity that plays out point by point, week by week. So the rest of the year, you're feeling pretty good. I made the right decision on Micron. I bought it, didn't make money. It hasn't gone anywhere without me. You're feeling like you're reaffirming your decision making. You keep going. Now, wait a second. Now we get past summer's over. We're heading into fall. Whoa, that Micron idea that I researched, that I came across, it's in the 150s now. If I would have hung on, I would have done better. But maybe you're saying, you know what, I repositioned that Micron and bought something else and it's up equally. So you're doing that game in your head, rationalizing the decision. The value you added day in and day out by checking that price out. All right, so you're feeling pretty good. You're feeling pretty good. All right, 160s. Now it's getting a little more interesting. Yeah, you still haven't missed much of a move. 180s, 200. There we go. Where we're going through. I see 220s, 290s, or 230s rather, 240s. So he's like, doggone, you don't have a stock picking problem. You have a holding on to them problem at this point. You're starting to recognize that. And this game goes on and on and on. And there's a couple of other entry points and exit points you could have made, because by 2026 we're in the 300s. You got a dip here in the 400s, so we can play this out. Geopolitical action happens. So it's the action you would have taken or not taken by looking at the stock throughout the day, every week or so. That's what's going to potentially impact your emotions on it. And obviously the story plays out. We top in the 1200s. Got to retrace down to 975 now. The story still holds. We know Micron, and this is at this level not a recommendation to buy Micron. The way I think through it is, sure, the supply is not meeting the demand right now. Margins are close to 70%, which is more than 2x the typical 10-year historic margin rate that Micron has. We're probably priced to perfection at these levels. So this would not be the now or the time to maybe apply a buy and lock it. This might just be more a trade in and out. So I'll tell you another example where I did not use that. So let's turn it over where I would not use the buy and lock. So about a year ago, a little over a year and a half ago, I bought a stock called Big Bear, BBAI. Now, it was the perfect trade, perfect setup. Bought it at 2 and change, liked the story, but there were a few things I did not trust about the stock, and had me concerned. It had potential. I didn't just want to buy it and sit on it forever. I watched that stock like a hawk once I bought it. I bought a lot of shares. I bought it at 2 and change, and 6 weeks later, don't you know, I was rewarded. It doesn't always work like that. I punched out at 917. So from 2 and change, maybe about 270, 260 to 917. It doesn't get better than that. When you can get that quick of a turn in 9 weeks, you watch the charts, everything confirms. That was more of a technical play. I would have never bought that stock with a buy and lock strategy. I just didn't trust it going into it. I couldn't answer those two questions. So I had 1 foot out the door the minute I hit buy. All right. And since then, what have I done with Big Bear? I've been in and out of the stock a few times. I write cash secured puts on it, pick up some premium. Right now, I got assigned 5,000 shares, and I'm an unproud owner of 5,000 shares at 450, and I'm collecting, just writing covered calls on it occasionally. But again, I still have 1 foot out the door. If I can get my money back. I want my buying power back more than anything on that position. So that's an example where I would not use it. So I used it in Kava, felt that good about it, still feel that good about it. Big Bear didn't. And a warning sign I had with Big Bear, this is always a key warning sign I pick up. I call it the Big Brother comparison. One of the things with Big Bear is it was compared to, it is like, when I hear this, it was like Palantir, that this is a smaller version of Palantir. That's always a warning sign to me. So I always get concerned, like why is it? There's always a reason for it being the smaller one. Now, you might have a diamond in the rough, but it just could be a justification. So it's important to separate that. And then finally, what I want to talk about, yes, if you've been looking at my hat, that emblem is the SpaceX emblem. Okay. Now, this is a confusing one. I did buy IPO shares. I have not bought any of the stock IPO. SpaceX, and this is confusing on 2 points. It is on my potential buy and lock. I have that much conviction in it. I just don't know when. So I like to let them, for an IPO, I like to see a stock find its price, right? It just needs to price. I'm starting to think better than a 50-50 chance we don't see under 135. Yes, that might not this might not age well. We might look back in a week, 6 months from now and say that was the craziest thing ever. But it's starting to exhibit a little bit of that to me. So that's one factor. I'm waiting for the stock to come in. I think it needs a little more time to tame down. And then the other thing is I'm a Tesla share owner. So I have to understand this story a little bit more. There's so many theories on this, that SpaceX and Tesla are going to merge. They're going to become one. I have a strong belief that's going to happen. So if I own a lot of Tesla, like what do I do with the SpaceX piece? I'm going to be in the same place anyway. I'm going to have this one company that's going to include Tesla and SpaceX. So then I'm thinking, do I really need to chase SpaceX here? Can I just buy Tesla on the side? And that is actually a new buy and lock stock for me. I've owned it for 5 years, Tesla. Had a low cost basis in the 140s. I'll confess, late last year when it punched all-time high, I was considering rolling out of it then. It was always a speculative play, but I tested the thesis and I said, you know what, the catalyst that I'm buying it for were actually, it's the darkest before the dawn. There's 3 or 4 big catalysts with FSD. Sales are improving. Optimus Robot, Robotaxi. I think we're on the precipice of just one of those catalysts actually finally materializing and scaling a little bit more. So I didn't want to punch out of it at the all-time high. So instead, what I've done, starting early April, I did add that to my high conviction buy and lock list. And I buy that continually, week after week. And I'm glad it's staying in this range, down 370 to maybe 440. It's failed 3 times there. It could stay here for another 6 to 12 months for all I care. I just want to accumulate a little bit more. So just to recap this, buy and lock. Do you have the conviction? Add comments. Do you use a strategy like this to test your conviction on the front end? I hope you enjoyed this. Thank you for watching, and hit the like and subscribe button.